Good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we'll be continuing with the algorithm development using the indicator Midprice. This is the second part of this ongoing series involving this indicator. And in today session, we will be looking to build the buy side of the algorithm. We will see how we can design and develop the system for execution of the buy trade using this indicator. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, I had explained to you how you can carry out the instrument subscription where the default instrument is being matched with the instrument of choice. Position amount was defined at 0. Afterwards, these mid-price blocks have been added with varying shift values. All other parameters are the same. Only difference is between these shift values. This is 1, this is 24, and this is 0. And to look at the price volatility prior to the execution of the trade, we are also going to take the help of these get historical candle, the hourly candle period, and 10 seconds each. The calculation expression blocks have also been used to define two newly created variables, one having the value 30 pips and another with the value of 5 pips, which we will use for execution of the trade. Now we go to the JForex platform where I will give you a brief refresher of how we are going to define this logic. The requirements are simple. We want to be trading with the trend, and at the same time we also want to take advantage of the regression to the mean principle. So what we are going to do, we are going to compare the mid price value over last 24 hours. If last hour's mid price value is higher compared to the mid price value 24 hours back, then we will be looking to initiate the buy trade, but not at any price. We want to have seen significant correction in the underlying instrument, and only after that we will be going to place the order. So for that kind of formation, I think I will have to go back in time and see if I can find any similar formation manually, or otherwise I will have to give you uh, I think this might fit the bill. Here we have the mid price value higher compared to the mid price value 24 hours back, and then we have significant correction in the underlying instrument. We see that USD GPY price drops significantly lower. But since we are working with the Euro USD, I will give you the example in the Euro USD, and let me find it. Euro USD has been in bearish momentum, so I think we will have to go back in time when it was rising, and somewhere here I think it might work. Let us assume this is fulfilling our 30 pips requirement. So here, as I said, the mid price value will be compared and it should be greater compared to the mid price value 24 hours back. And when we see that last hour's closing price is below 30 pips from the mid price value, the current mid price value of the Euro USD, we will be placing the order on the higher side, not on the lower side. So this time around, we will use the pending open to place a order above the current market price for buy. So whenever it starts to rise, we will go for the execution of the trade. That is the principle. Quite simple. We will be placing the order 5 pips above the current market price. So whatever is the current market price, the stop buy order will be placed above that. And the requirement is also quite simple in terms of price action. We need the last hour's closing value to be lower than the mid price value by at least 30 pips. It should be greater than 30 pips, the difference between the mid price and the closing value. And only if that is satisfied, we will be placing the order. So I think the formation is quite simple. So now let us head to the Visual JForex board. And we have defined these two values, the 30 pips and 5 pips. The first calculation which we will need to do is deduct the 30 pips from the mid price value, and then whatever is the result we will compare it to the closing value for the last hour. So I have to take calculation expression block, and for that I'm going to take this 30 pips as the second variable and take the mid price of last hour, or even you can take mid price of the current hour or last hour. It should work both ways. So I will take mid price of last hour. Okay, and the calculation is going to be A1 minus A2 by condition. Okay, so here we have defined this value. Now let us start adding the if blocks to define the conditions for the execution of the trade, and if and when we need further calculation expression to define certain variables, we will add those blocks again. Now we have to compare the current mid price to the mid price 24 hours back. So I take mid price 15 and mid price 14, and mid price for 15 should be higher compared to the mid price 14. So we have here comparison between the mid price for current hour and the mid price 24 hours back. Okay, and after that the second condition is also quite simple. We have to make sure that the closing value of candle 16 is lower than this newly created variable, which is simply deducting 30 pips from the last hour's mid price. So I take candle 16 candle close, candle 16 candle close, and compare it to BC, and here it should be lower. Candle 16 candle close should be less than BC. First input less than second input, and after that whenever price starts to rise above last time's candle close, we will be placing the order, and for that we have to take help of these three historical candles. The candle 16 candle close will be compared to the closing values of candle 19 and candle 20 respectively. So candle 16 candle close is going to be the common input, and candle 19 candle close needs to be higher. So first input greater than second input, and this one candle 20 candle close should have been less, and after this we bring in the pending open. So this is going to be first input less than second input, and now we have to define the input parameters for this trade command block. The price will need to be defined newly, which is going to be 5 pips above the current market price. So for that we need calculation expression. We take last tick ask and add 5 pips to it. Okay. This SPF carries the value of 5 and it has been multiplied by default instrument pip size. So we have 5 pips there, and this is going to be A1 plus A2, and this is going to be the buy execution price. Okay. It will remain unconnected for the time being. Okay. I will bring in multiple action, but prior to that we are also going to need further calculation expression block for defining the order validity. So I will add one more calculation block, and after that let us take logical block multiple action. Default instrument pip size, default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage is going to be 2 pips. Stop loss target price, I think a combination of 15 and 13 pips should be good enough since we are dealing with the hourly time frame. And then comes the question of order validity. We will keep the order valid for 4 hours, and prior to defining or creation of that variable having the value of 4 hour, I will arrange this logical blocks and join it to multiple action. Okay, and now coming to the calculation expression with price 10. For creating the order validity of 4 hours, we are going to need last tick time, and we have to create new 2 variables with the start value of first variable will have the start value of 3.6 million. Let me check. Yes, it is correct. And this 3.6 millions will be multiplied with 4. So we have to get the result as A1 plus A2 into A3. A1 plus A2 into A3. Okay. And result of the calculation is going to be named as OVT, but since we have to be careful with the data type, I'm going to take good till time and create a new variable here only. Oh, I will name it OVT. So here we have defined this variables. All the required variables have now been defined for trade command block. And I think the buy side of the equation of this algorithm is complete. I hope you have been able to understand how I have proceeded with this defining of the conditions for the execution of the buy trade. So that's it for the day. If any of you have any query or any idea to share, you can write to me in the feedback section. For further coverage on the market development, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there. Whenever you want to start trading or even to carry out testing, once you are done with this formation, you will need to take the help of JForex platform. So check it out. The links have been provided for it too. Thank you all for joining in. See you next time. Till then, goodbye.